Hi everyone, welcome back. Now that you understand the basics of investing, let's take a step further. Remember in the first video we explained investment basics. So now, how do you become a confident investor? How do you avoid losing money? Let's dive right into it. The first thing for you to do is to educate yourself, which is the basic purpose of this channel. So if you have been sticking to this channel, then you are in the right path. Educate yourself by learning investment basics like the stocks, the bonds, ETFs, mutual funds, and real estate. We explained all this in the last video. Follow financial news and update yourself. Understand how the stock market works. The next thing you should do is to set clear financial goals. So it could be a short-term goal, it could be a long-term goal. For short-term goal, it should be between 1 to 5 years. You are giving yourself 1 to 5 years. You will find emergency fund, vacation, home deposit. These are short-term goals. Medium-term goals, you give yourself 5 to 10 years, like buying a property or starting up a business. For long-term goals, you are talking about 10 years plus, and that includes retirement and wealth building. Now, thirdly is for you to determine your tolerance risk. Do you think you are able to tolerate risk? Some people have high risk tolerance, others do not. Learn to understand yourself, understand exactly what you can do, what is your risk tolerance level. So don't just invest in real estate because you've seen your friend investing. That person may have a high level of risk tolerance and you don't. Okay, so that is why the aim of this channel is for you to understand all of these things, to know exactly what to look out for, so that when you want to make any decision at all regarding your finances, you know exactly what you are doing, you know exactly where you are. Understand yourself, understand exactly where you are in this field, so that you know what you can do and cannot do. Don't just do things because others are doing it. Do it because you understand it and you know exactly what you can handle, what your emotions can handle, what your pockets can handle. Out there, you find that there are aggressive investors. These people are comfortable with high risk for higher rewards. So they are able to invest on higher risk investments. And they are fine with that. We have moderate investors, which they always take the balanced approach. So they do a mix of stocks and bonds. Conservative investors too, they prefer stability with lower returns. So these ones will always go for bonds and dividends. Okay. Next thing to consider is for you to start small but learn to stay consistent. Okay, that's the magic. So the key is to invest regularly, even during market downturns. Stop checking when the market is high or when it is low, trying to understand when you are going to buy your stocks or whatever. So although if you are good at this, if you are also monitoring, for someone like me that is doing the collection and then I'm going to put in when I feel it's become a little bit bulk. If I want to invest, or if I want to buy stocks and I find that the price is now less than what I bought it before, I mean, I'll be happy about that. It's a plus for me. Okay, but what I won't do is to hang on, is to say, oh, let me hang on and see if the price is going to come down so I can buy more stocks. Now, why I won't do this is because I would not know if it is coming down or when it is going to come down. But then, even at that, remember, if the stock's price comes down, remember that it is also affecting your own already invested money. So there's no need monitoring it. So whatever it is you have, just put it in there and keep being consistent. It is your own, it is your gain if the price goes up and then the money is already there. And if you are lucky, whenever you want to put in the money and then the price has come down, then it's a plus, it's a win for you too. So but don't get fixated on checking what the price is before you buy. So the next thing to consider is to diversify your investments. Avoid putting all your money in one stock or asset class. So you can always consider broad market index funds or ETFs for a well-rounded portfolio. Okay, so choose the right investment type. When selecting your investment, consider some factors. Yeah, you know I like telling you the things to consider before you make any decision. First, handling market losses with confidence. Are you able to handle market losses with confidence? I'll give you a scenario. A friend just invested in the S&P 500 and now she's panicking because she has lost about 50 pounds. She feels like she's made a mistake, but here's the reality. This is completely normal, okay? The stock market isn't a straightforward road. It's just a roller coaster thing, okay? So it can trend upwards or downwards. The key to success is to keep investing and think long term. Now, the question is, why did they lose money? Number one, it could be due to short-term market fluctuations. Stock prices could move up or down daily due to economic factors like, company earnings, global events, even political factors. Okay, timing of investments could also affect it. If they have invested when prices were high, then it means that a small dip could temporarily show a loss. But this loss is always only on paper, okay? Unless they sell it. It is only on paper unless they sell. So if you panic at that point, you've seen that there is a dip, you think you are losing money, and then you decide to sell it, it is your loss. But if you leave it there, you find out that over time, the market could go upwards. You could have an upward trend, and then you will cover up whatever it is you have lost, and then it keeps going that way. Okay, so the most important thing is for you to have the right mindset. It is a long-term investment. It is not something you see. In as much as I advise you monitor it, don't just get fixated. Now, how do you avoid these losses? First, think long term. Investing is a marathon, it's not a sprint. So the S&P 500 has historically bounced back from every dip. Invest regularly. Use the pound cost averaging, which means you are investing consistently. You are buying at both high and low points. Don't just wait for when it is low to buy. Okay, so by doing it like this means you are reducing the risk over time. Also, diversify your portfolio, which means you are combining both stocks, bonds, funds, or global investments. Okay, this will help you to spread the risk. So learn to stay calm and trust the process. Market dips can be scary, but they are a normal part of the journey. Common investing mistakes to avoid: trying to time the market. Don't time it, okay? It's better to stay invested than to guess the best entry point. Yeah, you are just delaying. Panic selling. When market fluctuates, don't just be in a hurry to sell off your stocks, okay? Believe you me, it's going to recover. Another thing I will have to mention is not to neglect fees. Do not neglect the fees. There are always fund fees attached to every stock, so it comes in percentage, so always look out for the percentage. For the one I'm dealing with Moneybox, my S&P 500 as at the last time, as at yesterday when I checked, is 0.07%, okay, 0.07%. Then when I checked FTSE 100, that's FTSE 100, the fund fee was 0.11%. Some other ones could be 0.22. All of these things matters a lot, so don't neglect those fees. So even small fees can significantly impact long-term returns. Another mistake you should avoid is investing without a plan. Define your goals and risk tolerance before you invest. Now you are equipped with the tools to invest with confidence. Have you got any questions? Please drop them in the comment section, and I would love to hear from you. And if you found this helpful, hit that like button and subscribe for more investing tips. I'll see you in my next video. Bye-bye. And what if I told you that you can also invest in real estate even without having a large or a huge sum of deposit. I'm going to make a separate video regarding this and just to explain this whole process, okay? So you can actually be a landlord without having a huge deposit, and you'll be collecting a part of your rent. It works in a different way, yeah, but I'm going to explain it further in my next or in another video. Not it may not be the next video. In another video I'm going to explain it, so stay tuned to this channel. You will gain much value, I promise. I've got loads of things to share with you. Aside investments, I've got loads of side hustle idea. I've got loads of different things to share in this channel, so stay tuned.